Hello, ladies and gentlemen. Good afternoon, and welcome to your Sunday show. I'm glad to have you guys here on this Sunday, the 6th of June, 2021. Thank you for tuning in. We're going to talk about Basel III. Okay? So, first thing I want to talk about is, will they implement it? It's coming up on the 28th. To really get an understanding on what's the percentage of the chance of them implementing it, we have to take a look at the world in general. And we have to generalize. Okay? What we notice is, if we take a look at the world in general, what we notice is that the world is kind of divided in half right now, between East and West. Now, this is generalizing, looking at the world. They have an old saying, you can't see the forest for the trees. But now, if you go up in a helicopter and you look down, you get a different viewpoint of the forest. And that's basically what we're doing by generalizing here. That the world is divided into West and East. And what's critical about all this is, I think you're going to find that the West and the East are pretty much evenly matched in the world. And so the West, I don't think they really want to implement Basel III. And the East, I think that they want to implement Basel III. So as far as the implementation of Basel III is concerned, I'm pretty much giving it a 50-50. That's pretty good odds of it being implemented. See, looking at this very quickly and just giving it a quick analysis, you'd say, oh, no, they'll never implement that. But hey, wait, hold on a minute. There's a lot of big forces out there and stuff that want this implemented. So yeah, maybe they will implement it. So what's going to be the effect if they implement it? Well, first let's start to understand what it actually is. And to do that, let's open up the charts right here and take a look. Basel III. A gift for physical gold investors. Basel III agreement will come into force on June 28, 2021 for European banks and on January 1st, 2022 for British banks. It includes a net stable funding ratio requirement. It will make holding unallocated gold problematic, but the NSFR requirement is bullish for allocated gold. Well, what that means, unallocated gold is like when you have gold futures contracts. And allocated gold means that you're actually holding the physical gold in your own possession. That's allocated gold. It says, according to the Basel III framework, gold will become a zero-risk asset. Overall, Basel III will be great for physical gold. Basel III is a set of international regulations concerning bank capital adequacy areas and testing and overall market liquidity. Many of these regulations have been introduced straight after the 2008-2009 financial crisis, but there are several aspects of these agreements that will only come into effect on June 28, 2021 for European banks and on January 1st, 2022 for the UK. To sum up, gold will become a risk-free Tier 1 asset and will become more expensive to buy and sell unallocated gold. It'll be more expensive to buy and sell unallocated gold. These factors are highly bullish for the physical gold. So investors in this precious metals will be generously rewarded provided they buy physical gold. Let me explain this in a bit more detail. Gold is a risk-free asset. Under Basel III, gold would become a Tier 1 asset or zero-risk asset. You know, it's been that way all along. It's just now they're saying, hey, it's a Tier 1 asset. It has been all along. Gold hasn't changed any, guys. You know, there's no counterparty risk to gold, to physical gold. Where all these other assets, all these paper derivatives products, you know, I'm going to tell you about the gold market. For every ounce of real gold that's out there, they've sold 100 paper contracts that people think that they own that same physical ounce of gold. But all they own is a piece of paper saying you own that physical ounce of gold. It's like a game of musical chairs is what they're pulling, you know? It's a racket that they've been pulling, and they've been pulling it for years. Basel III is going to start to slap the wrist a little bit. So like I say, the West doesn't want it. The East wants it. Both sides of the world are pretty much equal now. And you know, there's another thing about this: both sides of the world being fairly equal in power too. Talking about military strength, it's not good. You have two sides of the world, and East and West, and well, anyway, that's a subject for a different day. We're talking about Basel III here. So it says, in a national discretion, gold bullion held in its own vaults or in an allocated basis to the extent backed by bullion liabilities can be treated as cash and therefore risk weighted at zero. In addition, cash items in the process of collection can be risk weighted at 20%. But the interesting point is that gold must be physical and held in the institution's own vaults. It should not be in paper form or owned and leased by someone else. Most gold investments are leased or borrowed or held in paper form, so it looks like major changes are about to come. Yeah, I'm going to tell you guys, if they implement this, and like I say, there's probably a 50% chance of them implementing it, at least maybe even a little bit higher than that. If they implement this, oh my goodness, it's going to crack the nut wide open. It's going to be the proverbial you-know-what's going to hit the fan. Because if gold prices and silver prices break free, there's a long way for them to go up, you know. And it's going to reflect very negatively on the dollar. And I think the dollar's ready to start its demise anyway, you know. It's just trembling. The dollar's just trembling to hold ground, you know, as far as purchasing power is concerned. So this is huge. And we go on to read here. It says major changes are about to come. Since gold will have such a risk-free status, many banks will be encouraged to buy more for bookkeeping purposes. This will also highly encourage every central bank to raise its physical reserves of this shiny yellow metal. The decision to make gold a zero-risk asset was not made yesterday. Of course, in 2017, it was announced gold would become a Tier 1 asset under Basel III. The year was marked by central banks' massive buying of gold, 651.5 tons. You know, the Chinese just quite recently have been buying gold again in large quantities. It seemed like during the coronavirus thing that they took a little hiatus from their gold buying, but it's on again, you know. And they were buying gold steady there for a long period of time, you know. And what they do with it is they resmelt it down into 1 kilogram size bars, you know, which is roughly a kilogram, I believe, is like 32 ounces, troy ounces, something like that. Anyway, the fact serves as evidence that these new regulations will be bullish for physical gold, in my opinion. What is more, under Basel III, gold will not even be treated as a commodity, but rather as a currency. This basically means that the yellow shiny metal is far less of a risk and less volatile than most commodities, since according to Basel III, currencies tend to be more stable. Basel III, net stable funding ratio. Okay, so here's where we're going with this. The bottom line is we haven't got very much time left till Basel III comes into effect, if it comes into effect. And I think there's a pretty good possibility that it will. You guys want to keep this under consideration, being as the physical price, you know, has been held low for a very long time due to direct manipulation using what's called paper short contracts in the futures markets. And in particular, the world is starting to have a harder and harder time to access silver deposits. It's getting trickier and trickier. countries, ever since populism, countries are becoming more and more, and also these new green initiatives and all these things that are going out there right now, countries are becoming more and more, how can I say it, like maybe a guy's got a big silver mine or something, he got a big diesel engine up there and stuff, more and more susceptible to regulations, different types of land ownership, legal rights, and all these kind of questions coming into play against the miners. They're having a harder and harder time to just go in and find a new silver deposit or gold deposit and just go in and mine it without legal restrictions and paperwork and having to wait and all kinds of problems. And then when they get in there, all of the best mining resources around the world now for gold and silver have mostly all been dug already. Yeah, they're finding new ones, but they're not as good as the ones they originally found. You know, when the gold rush was on out in California, Sutter's Creek, you know, when they first went in there, there's big gobs of gold in the bottom of the creek. Gold nuggets the size of like, big, just laying in the bottom of the creek bed. They could just pick them up, walk down the creek bed and pick them up and get a whole pan full, 20 pounds of gold, just walking down the creek bed when they first went in there. And that's how it is with mining. When you first go into a really good new site, there's veins of gold, and generally it's in white quartz, you know. And there'll be big veins of gold, and something that in the old days they used to call the mother lode. You don't find mother lodes anymore. In the old days, that used to be very famous in mining. Was they say, we struck the mother lode. That means that they busted into a big vein of quartz and there's a big thick vein of gold running down through the quartz. That's all gone. Those days are in the past. Just like the trees, you know. When they first went into the virgin forest, there's trees you couldn't put your arm around them. You couldn't put 10 men's arms around them. They were so big. They were enormous, and they felled them over, and they were able to cut boards. 48, can you imagine 48-inch wide boards? A board 48 inches wide. Well, they keep going in harvesting, and in the end, now they have to splice two boards together to make just a 12-inch board. Because they can't get lumber that big anymore. And it's the same way with gold and silver. They're scouring the earth, and they have to dig out more and more ore and process more and more ore to get a smaller and smaller amount of precious metals. Well, that takes more energy consumption. More diesel fuel. Diesel prices are going up. It's an absolute no-brainer that they've been able to suppress these prices down this long using paper futures contracts that represent the underlying asset, but that's all they do is represent it. They are not the underlying asset, and that's going to come to the fore. If this comes into effect, it could be the end of the game, the end of the road for the paper's futures contracts and the price suppression of gold and silver. And how is that going to reflect? It's going to mean one thing to all investors around the world, that it's a sign of a failing currency. Okay, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.